as an example. Say our next structure level is here. Say the market has done something like this. Actually, that's a little deep. Get this up here. Say our next structure level is right here. Look left, structure leaves clues. We can kind of make a prediction of where the market is likely to go next. So we're putting our targets right here. We have this much room for potential profit. Now, just as structure leaves clues, let me ask you this. If we're in a bearish trend, if we have confirmation of that, and we're waiting for a pullback, where does a pullback have to stop before it's considered invalid? Look left, structure leaves clues. Our previous outside return, yep. I see a lot of people typing that in. In order for this pullback to be valid, we have to stay, in this case, beneath this outside return. So we know that this is a great level to put stops. But look at this. If I'm entering up here, if my stop losses are down here, would you guys classify this as a good trade for me to take? I'm risking this much in pink to gain this much in blue? Probably not, right? This is why we wait for that outside return. Instead of selling it right here, we wait for the market to retrace. We then use one of our entry techniques, and we look to get involved in the market right here. Now what do we have? It's like magic. Look at that. Here's our potential reward. Look what happens to our potential risk. 100 out of 100 traders should say that this looks a lot better than what we had before. So I'm throwing you guys a bonus. It wasn't on the plan. I didn't want to talk about this, but we got on the subject of trading, and here's why it's important to wait for that outside return. Here's why it's important to be able to predict where that outside return is going to come to. It allows you to identify, where am I going to enter? Where am I going to put my stop loss? And before you even enter the trade, before you click the button, before you put any of your money at risk, you know just the amount you're willing to risk on this particular trade. You know just the amount that you're willing to benefit if it indeed rolls over and makes money. Then you can start going through your process. Does this risk reward work for me? Is this a trade I want to put myself in? So we'll leave it at that.
Yeah, that's great. I mean, it gives some, although we haven't talked in detail about it, we won't, today, it does give us a look at that, and you can say, well, okay, well, where is all of this going? Because that's the next big question is, okay, well, what do I need to do now, and where is this going, and when is this going to start making sense for me in my trading? And that's really where we want to be at. But let's take a look at, what do we got? Do we hit our targets?
Yeah, if I go ahead and put my mic on, we remember our pound yen trade from earlier. I don't have my marks on because, again, I messed up my charts, but we talked about an equal move here. And this is actually an ABCD pattern, but don't worry about that too much. We talked about an equal move right here. We zoomed out our chart. I actually went to a higher time frame, but we looked left, structure leaves clues. Now, this was a counter trend trade, and you remember we entered right about 57.60, I have it written down. Right about 57.62 was our entry. Right here. Market spiked up, gave us a little bit of pain. And you know what? When the market does this little bit of consolidation, this is when rookie traders lose because you get scared. Last time I showed you this, we were up, 20 pips. Then it went down to 15. And in here, you're like, oh, man, Akil, it's going to reverse. Oh, no, I don't want to get into it. Let me take my money out early. And what do? Well, you end up with a 10-pip winner. You take both positions off for 10 pips, so you make 20 total pips on the trade, right? For the rookie traders that got scared and exited the trade because of fear they were wrong. I had my target ones right below the 58 even handle. I have it written down, 157.98 was target one.